Our next topic on the NextGen Q&A series is that of taxes, which of course is everyone's favorite topic. But for those early on in their careers just trying to get the lay of the land and figure out what all they need to be doing or what all they need to be thinking of tax-wise, this video is going to be really helpful for you. So first topic on the issue of taxation, first you got to clarify what kind of tax are we even talking about. There's different kinds of taxes that one might pay. In today's video, I'm going to be discussing federal income taxes. The other types of tax you might be paying are state taxes, depending on what state you're in, but there's also Social Security tax, there's Medicare tax, there's different kinds of taxes. Today's comments are just about federal income tax. You should check out our other video going through a typical pay stub, because in that video we go through the different categories of tax that you may see little abbreviations on your pay stub and not know what that is. So most folks who are W-2 employees, first tax lingo, W-2, that just refers to someone who's an employee, works for an employer, right? So you receive income in the form of your paycheck. And you may already notice that they withhold taxes for you. So maybe you're wondering is, why am I paying the amount of tax that I am paying? And probably behind that is like, wow, it feels like I'm paying more than I should be, right? But anyway, it comes down to this idea of tax brackets, right? So you've probably heard this term, tax brackets. Okay, so here's how federal income taxation works. There are kind of bands or brackets, what we call, of different tax rates, right? And the lower your income is, the lower a percentage of tax you'll owe. As you earn more and more income, that income is taxed at a higher rate. Big misconception, not all of your income is taxed at the same rate, okay? So for everyone who earns income and pays US federal taxes, the first amount of income, and I'm not using specific numbers here because the brackets change, right? But the first portion of income will be taxed at that lower rate. Whether it's you or a billionaire, it will be taxed at that lower rate. The next portion of income will be taxed at the next higher rate, and so on and so forth until you hit your total, income that you earn, right? So there's this idea of, oh, if I earn $1 more, I'll be in a higher tax bracket. That may be true, but only that $1 will be taxed to the next bracket. All of your income kind of fills in those brackets accordingly. So how do tax brackets translate to that amount you see being withheld for taxes on your pay stub? Well, I don't know if you recall back when you got your job and you kind of first filled out all of your paperwork with human resources, there was a tax form in there that you filled out called a W-4. This is where you provide basic information about yourself and your household to your employer, and your employer uses that information. This is whether you're single or married, this is whether you have other income sources. They take that information and they apply that to your income, and that's how they figure out which tax brackets they're going to withhold for you. So throughout the year, as you're getting paid those paychecks, your employer is withholding income tax at the appropriate rate. And of course, we come on to tax time and you have to do your tax return. Now there's different ways of going about this, whether you want to go a DIY route using a tax software. The IRS actually has a file for free tax tool you can use, or some people choose to hire a CPA. On that note, let me just say, whether you choose to hire someone or do it on your own with the software, probably ultimately comes down to an issue of complexity. If you're someone who has one job, one income source, and you're a W-2 employee where your employer automatically withholds your taxes, probably you could file for free or use a tax software. If you have real estate holdings and business interests and a lot of complicated things, that's probably where it starts to make sense to hire a professional. Regardless, however you choose to prepare your tax return, the process is going to be very similar. You're going to gather all of your tax documents. That would be all of your statements, all those forms you get from your employer. And what you're going to do is input all that information, or the CPA will do it for you. And here's what the IRS is trying to get to. How much taxable income did this person earn? What do we need to take off of that in terms of deductions or credits? And then how much tax, if any, do they owe still? Regardless of how you choose to prepare your tax return, really the process of doing that and the purpose of the tax return remains the same. So let's talk about that purpose. Why do we do a tax return? Why do we do that each year? So the tax return is that annual time where you settle up with the IRS. right? So you gather all of the documents for that tax year, all of your taxable income, and all of the tax payments you've already made. At the end of the day, you're going to stack those two against each other. And if you happen to owe some more, you'll go ahead and pay that. If you happen to have overpaid it all, then you'll get that back in the form of a refund. So when you gather all those documents together, as I said, you're going to report all of your taxable income sources. And then there's a couple of categories of tax items that could affect the taxability thereof. A big category of those is what we call deductions. You may have heard these terms kicked around: standard deductions, itemized deductions, right? So what is that? The IRS has deemed there's a portion of your earnings that they're going to give you a freebie, right? So they're going to add up all your taxable income and just knock some right off the top, right? So the amount of your deduction or your taxable income depends on a couple of things. So your marital status, they call it your filing status, but it also may depend on other kind of either charitable activities that you may be engaged in, health expenses that you may have incurred. What we're outlining here is there's a difference between the standard deduction, which is just a flat dollar amount that you deduct from your taxable income, versus itemized deductions. Itemized would be if you have certain categories of expense that together add up and exceed the standard deduction, then you can itemize your deductions instead. So you've heard those terms probably kicked around. Anymore, the way the tax code is now, most everybody in a cut and dry case is using the standard deduction. Another big misconception is kind of this statement of judgment placed on the outcome of your tax return. So for example, some people think that if they owe anything on their tax return, that somehow is a bad outcome. Or conversely, some people think, hey, I got a refund this year. I got a couple $1,000s left back on my tax return. That's a great outcome. That's not necessarily the case. Okay, so think about this. Your tax liability, which is the tax you owe on your income generated in any given tax year, it is what it is. You owe that much. Now, you pay as you go throughout the year. All you're doing on your tax return, remember, you're settling up, right? How much tax have I paid versus how much I owe? And then let's make up the difference, right? So it's not necessarily a good thing to overpay and then get a refund, because then those dollars you could have had invested and growing for you throughout the year, and the government got to hang on to it. So typically you want to try and hit it even Steven. You want to try and pay about what you owe over the course of the year. That's usually the best way to go about it. But there is some strategy in there. Some people, and an element of preference as well, in terms of, do you want to owe or do you want to get a refund? Look, there is a ton to be said about taxes. I mean, let's face it, there are people who devote their lives and their careers to knowing the tax code and everything that goes into it. This video gives you a good primer on the topic. All right, so these are the basics of what you need to know as kind of an employee paying your taxes. I will say this, if you have more detailed questions, take a look at that link below in the description. You can submit a question for our Q&A series and get it answered here on the NextGen Q&A series.